Hey guys, David Robinson here with the Apartment Investing Journey. Thank you for joining us today. We have a great show. I'm excited for our guest today. He's someone that I've been following and watching from afar and has a pretty cool story to share with us. Lucas Miller, welcome to the show, man.
Hey, I really appreciate you having me on. This is awesome.
Yeah, I'm really looking forward to getting into your story and talking to you about your transition into the apartment investing world.
Yeah.
But why don't we just back up? Let's hear the whole thing from you. I always like to start at the very beginning. You were born, and then what?
So I was born in Colorado, actually, and I was raised here most of my life. And I have kind of an interesting journey that, typical, went to high school, didn't really have a plan. So I just went to college, right? Like everyone does. That's what we were told to
Right.
do. So I went to college and still really didn't have a clue. So then I went on to grad school and still didn't have a clue. So I was living on the East Coast in DC and had this graduate degree and kind of a low paying job, and just realized like, I hate this. This is the worst. Like I don't want to get too much into it, but it was basically
No,
working.
please tell us about it. Yeah.
Well, it was working in like in national security, basically, in a broad sense. And I loved it. Like I loved learning about it. But then you realize that the only real track record for someone like this, career track, is working in a windowless room, not talking to anybody about what you do. And it's just super high stress.
Hmm.
And so I realized, like, I don't want to do this. So I started
Yeah.
to look for a way out, and kind of took a longer journey, but then ended up back here in Colorado. And we had my first kid at the time. And so pressure was on to make a living. And so I took a job as a lobbyist. And before you judge me too much, I was a lobbyist for probably some friendly crowds to this crowd, but I was a lobbyist for owners, managers, and developers of multifamily properties.
Oh,
And
wow.
so a lot of what I did was landlord tenant law stuff, like lobbying on behalf of landlords and telling our story and representing our interests, our collective interest in a way, at the state capitol, at the local level, during development process, even down to like zoning issues. I was really knee deep into that stuff. And so a lot of my coworkers and people I was working with, they were these really awesome operators that were just doing these multi-million-dollar deals. And it was always something that was in the back of my head, like, oh, that's so cool. Because at the time I was doing some small residential investing. I was doing flips and house hacking and even some like small private lending at the time, but nothing that would ever top, Wall Street money, right? Like multi-million dollar apartment buildings, new builds, stuff like that. So, just kind of put that out of my head, figured, oh, that's for the big guys. Till I met someone here in Colorado, and he was maybe 3 or 4 years older than me, and he was just killing it. I mean, in the biggest sense, I can put that into perspective, like taking down these huge deals with this older partner that I also knew, and he was an awesome guy, and just kind of figured out like, hey, age doesn't really factor into a lot of this stuff, right? Like you don't need to go from doing residential real estate for 20 years, then jump into like bigger commercial, and then eventually someday maybe you make it to big commercial. This guy just kind of proved it wrong. And so I just said flat out, like, hey, how are you doing this? How do you underwrite these deals? How do you figure out if this is a good deal? He's like, oh, let's just go to lunch and I'll talk about it. And so, we had lunch, and, he sparked that interest early on. And so I'm
Was this
really,
while you were still working as a lobbyist?
yeah, which was
Okay.
cool because I was able to kind of add value to him and, in a sense, pay for his time while still like helping him out, which I'm incredibly grateful for. Um, but it was one of those things where you hear it, it makes perfect sense, and then you just don't act on it right away. It was the silliest thing I've ever done. I just put it on the back burner for over a year
Hmm.
till finally, like, realizing that residential frankly sucks. Like it's not I don't enjoy it at all. and then losing some money on a flip and realizing that I needed to scale. All these things just kind of converged into like, all right, now's the time to switch to commercial.
Well, but also you have, I mean, I am assuming that your lobbyist role, and I'm not familiar with how that industry works necessarily, but is it a W-2
Yeah.
position? Okay. So here
Yeah.
you have this W-2 job, you're starting a family.
Yeah.
This guy sort of, you connect with him, you start to learn about this concept. But I can imagine. Tell us about that transition. I mean, it's enticing. You see what this guy's doing. You see he's making money. You like the business model, but you're
Yeah.
in the residential space. How do you start to transition?
Well, I think I probably have like an experience a lot like a lot of people. Like, oh, you being this entrepreneur is so cool. Like you're your own boss and you get to make your own money and you work whenever you want. And from a W-2 standpoint, looking down onto that, it's awesome, right? There's nothing better. But then you get there and it's like, I don't have that salary that's coming in every single month. I don't have all these things that I was able to do. And so we'll get into like my biggest mistake later, but probably my biggest mistake what had to do with the transition. And it was really tough, and it was a huge blessing that my wife was also working. So that shielded a lot of that blow. But to get into that, I thought, oh, I'd find a deal in like 6 months, maybe 6 months, probably 4, because I work hard, right? Fast forward a year where I hadn't had a deal yet. I had all this education, right? But, I just didn't have all other pieces in place. And the biggest piece I didn't have is a track record. And that was it. Like I had all the education. I could speak broker lingo. I could underwrite deals. I knew where to find some money, but I just couldn't get tapped in. And so luckily I met my mentor and he was able to open up some of those doors for me. And I was able to use his track record and, that was it. Then I was hooked. After that first deal, it was awesome.
So I want to bridge the gap between when you mentioned your mentor, is this the
Yep.
individual that you first met with, or is this someone different?
Yeah, this is someone different.
Okay.
And, he's awesome, but that was the game changer.
Okay. So the initial contact was an individual that you'd met while you were working as a lobbyist. He had sort of perked your interest into this space. You start to put more energy and thought and effort into actually sourcing a deal, learning how to underwrite, all that, and then you find a mentor.
Yep.
How did you find a mentor? That's what a lot of people understand, that's one of the key, aspects of breaking into this space. How did you go about it?
Well, just to go back a little bit, the first guy I met with, his name is Chris. That's easy. It's like that whole thing where, 20, 30, maybe like 50 years ago at this point, nobody had ever run like a 4-minute mile, but then one guy did it. And then now suddenly like 30 people did it the next year. So it's just that mindset shift of like, oh, someone my age can do that. And from there, that's all he did for me, which was awesome. But then it was like, I got to find someone to work with. And so, there's obviously a lot of people in this space that teach multifamily syndication and help out with that. And so I kind of looked around for a little while and wasn't really happy and figured, oh, I could just do it on my own. That was that 1 year where I did nothing, right? Like I educated myself. I listened to a ton of podcasts. I read a ton of books. But yeah, 2017 yielded 0 for me. And so I was at a conference and just talking to this guy who was there and just explaining, hey, this is my frustration. Like, I don't really care about the education. I don't really care about the networking. All I need is your name on my email train somewhere so I can use your name to open doors, basically. And he's like, cool, let's do it. And so obviously there was a cost to that. And a lot of people are like, oh, you should never have to pay for that stuff. And to an extent, I agree. Like some of that stuff's overpaid, but I made that investment back, which was phenomenal.
Yeah.
Like that was the best thing for me. So for me in my position, it was awesome.
And was this someone in your local market that had a reputation in your space, or was it just someone more nationwide, sort of name brand recognition
Yeah,
that,
nationwide name brand, not huge. Like he keeps his group really small, which I love. Um, but at the same time, like he's purchased over 5,000 units. You
yeah,
can't buy that reputation, right? So he's doing
yeah,
something right.
cool. That's great.
Yeah.
And so did you end up really just utilizing only just the name and how did that relationship work?
Yeah.
Obviously, did you end up just enrolling in the normal program and just use what you wanted?
Yeah. So that's how it started, right? Like you think you know everything and you get into it. You're like, I don't need your education. Well, turns out the education I had was horrible. Not horrible, but it was a good primer. Whereas this guy, he's like, no, your underwriting skills are garbage, basically. You
Hmm.
need to, you know, I mean, that is everything with the deal, right? It's the underwriting. The more variables you can take out of the deal, the more secure your investors are going to be, and the more they're going to want to come back. So really, that was the training that I got, and that was over a year, right? So,
Hmm.
um, but he also had access to other students in his group who had deals, and so that was like an easy transition for me to say, okay, I'm going to get involved in a deal to a lesser extent, right? It's not going to be my deal to start, but I'm just going to test the waters and see how much money I can raise, how much, you know, I can do as far as like earnest money and all of those parts that go into the general partnership. Um, so it really opened the doors to a lot of new partnerships, which is huge. And that alone was probably worth the money. Um, it's just kind of an extra that you came with training and a KP and someone a key principal, meaning someone I can partner with to sign on the loan, because a lot of these loans have to have net worth and liquidity standards that I don't have, but he does. So uh, yeah, it was a no brainer for me.
That's great. And maybe I can have you dive even a little bit deeper from that time frame. Like, what did that next year look like for you? Like, what were the steps that you took once so you had your year of like
Yeah.
of frustration and no deals amongst all your effort. You find a mentor, you plug into his system, you plug into his network. What was like the first real deal that you were a part of, and what did that look like for you?
Yeah, the first real deal I was a part of was 384 units, and that was in the Southeast. And it was an awesome deal, like really awesome, actually. Um, and it cash flows really well and all this stuff, all those things that you look for. And I first got started just passively investing in it. And that was an easy start. I raised a little bit of money for it, but the main thing was like, I wanted to see how it worked on the passive side.
And were you
Um,
allowed to be on the GP side of that deal?
Yeah, yeah. So
Okay.
with that, because I raised a lot of money and did some extra work as far as like ongoing investor relations and help with some of the due diligence stuff, I was able to get on the GP, which was cool. He didn't have to do that, but he did.
Yeah.
So got in on my first GP within like a couple months, which was huge. You know,
Yeah.
for someone who just spent a whole year not doing anything, like.
And that was roughly 2018 ish.
Yeah, well, this is like the very end of 2018, beginning of this year.
Okay. Cool.
Um,
Great.
yeah, so fast forward to when we're recording this at the very end of 2019, it's just shy of 700 units, a couple deals peppered in, and hopefully another deal closing by the end of the year. So
Man. Okay. That's a big jump.
yeah, it was
Let's talk
exciting.
about that. How does one go from struggling in his first year to not even getting a deal under his belt, finding a mentor, being a part of the passive investor and on the general partnership side of a 384 unit, and then to
Yep.
700 units within literally a 12-month time frame? Like, what were the steps that you took?
The biggest step that you can take when you do something like this, and whether it's investing in a mentorship program or um, investing in going to conferences or just any sort of networking, is to make the most out of the people that you talk to. And what I mean by that is, when you join, at the time there was like maybe 30, 40 students or something. I got to know every single one of them really well. Like I was on the phone with people all the time. I was constantly networking. started a podcast, all these things that were able to open up doors for me, so that later on down the road, I could give back to them. They could help me. And so it's really a cool way to network when you're part of this group together.
Hmm.
So the next step was one of those partners that I was reaching out to invited me to help a lot more in depth on a deal in Atlanta. So that was 136 units, 137 units. And that one closed in July. Did a lot for that, like on-site due diligence, start to finish. We worked that one hard and oversubscribed that one in a week and a half.
Oh,
So
wow.
that was probably a home run deal for me.
How much did you raise on that one? Like all together?
That one was 2.7 million.
Great. In a week?
Yeah, and there was other people on the deal, but
Sure.
yeah, it was like I had to turn away a lot of investors, which is really frustrating for me. But at the same time, it was like now they're ready to go for the next one, which is cool.
Yeah, yeah, that's great.
Um,
Hey,
yeah.
one question. I do want to just clarify one piece. So when did you actually exit your role as a lobbyist?
That was, gosh, you're putting me on the spot here. May or
Roughly.
April 2017. April. Yeah, probably the end of the year 2017. I would say.
Okay, cool. So you went. So there was a part of that time where you were jobless and you were looking for a deal.
Oh yeah.
And weren't able to find a deal. What was that time frame like for you? Like, I think that's one thing I do want to dive into real quick, is because I think there's a lot of people that, well, either one, they're scared to make that move, and so they never do, or two, they might jump a little bit too early and find themselves in a tough spot. What was that experience like for you?
That was a rough experience, right? And I mentioned my wife was working, so that was a huge relief. I'd probably be homeless right now if that weren't the case. But we had other residential stuff that was going that kind of floated a little bit of that. But eventually we just decided to sell everything in the residential space and burn the ships, basically. We're going full bore multifamily. That first year was rough. A lot of strain on, our relationship, just like, hey, this is taking longer than I thought. And it was self-inflicted, right? My wife is phenomenal. She would never pressure me like that. She would never get upset that I wasn't doing deals, right? But it was self-inflicted. And there was this unnecessary pressure on me, like, I got to buy 1,000 doors before the end of the year. That's unrealistic, right? Like, no one's going to, well, maybe some people will do it, but definitely not me. So the goal for 2019 was really, okay, let's get into some good deals. Doesn't have to be, home run, stellar deals. Turns out I got lucky on that, but just let's do something. And so switching my goals from doing like, I got to make X amount of dollars or I got to do X amount of units to I'm going to call like 4 brokers a day or something. And maybe that wasn't it, but focusing more on the inputs rather than the outputs. Yeah. And that was a huge shift for me.
The outcome will show up if you do the activities.
I mean, you probably know that really well as a residential real estate professional. Like, you focus on the inputs and what you put into lead generation and stuff like that, and the outputs take care of themselves.
Yeah, absolutely. This is all good stuff. Okay, so I didn't mean to take us all the way back, but I wanted to get a taste of what that was like for you during that time in your life, and I appreciate you elaborating on that a little bit. Okay, so you do the 136 deal unit in Atlanta. Move us forward from there.
From there, it was just working on continuing to grow the investor database, right? Like, no matter if you're just starting out or you've been in it for 20 years, you always need more investors. The more money you have coming in, the more bandwidth you have to take down bigger deals. So part of working on my inputs is working on lead gen for passive investors. So I really started to build that out the rest of the year. And we got some traction. This is something I'm still learning, right? Like, I'm not an expert at all, but I started to focus more on how I could help out people that were looking to diversify from the stock market and people who were trying to move away from traditional investments. I found that the younger generation, we saw, our parents either lose a lot of money or all their money, or, at least we knew someone that lost a lot of money in the last crash. And so a lot of our folks are weary of, investing in traditional investments. So I've kind of zeroed in on that as a niche for finding investors, and it's worked out pretty well.
And you started your podcast as well, right?
Yeah.
Tell
So
us a little bit about that.
yeah, and I didn't intend to start a podcast to start. It was more like I kept asking the same questions of people who have passively invested before. Like I knew people who had done it. And so I asked, the same questions over and over again about, hey, how did you research this? How did you vet your sponsor? How did you do all these things? And finally I was like, this is good content. People probably want to hear this. And so I started Fear-Free Passive Investing, just to kind of to alleviate some of that fear that new investors have when getting into commercial real estate, right? Like it's a super intimidating thing when you know nothing about it, and you get into it. So I try and simplify it down. Like, here's the steps you can take to vet a sponsor, to figure out a deal, and I just interview people who have done it before.
Yeah, that's awesome. Yeah, and all the while you're learning too,
Yeah.
right?
And that was the funny thing is, like, the podcast is not me being an expert and talking to someone and preaching. It's me asking questions that I honestly have and trying to share my experience of, both failure and success, and just trying to get the word out there.
Yeah. Yeah, that's one of the greatest benefits that I've experienced, and which sort of a side benefit is just being able to have an opportunity to talk with great guests and learn from them all along the way.
Huge benefit, right? And everyone
Yeah.
says, oh, the podcast space is overcrowded. Well, it's overcrowded to people who are in it every day. But, my aunt who listens to like true crime podcasts has never heard of it. So,
Right. Yeah.
Your
Yeah.
audience is probably not. So.
Yeah. Love it. Love it. Okay, cool. So you start really focusing in, honing in on the activities that are going to help you build up your investor database. And where'd you go from there?
From there, it was really trying to streamline my processes. And I focused more on growing my investor database rather than trying to seek out my own deals. I got tapped into a network of people who have more deals than money. So it's a good position to be in. Everyone's talking about how hard it is to find deals right now. It doesn't seem to be a problem for our group. So I figured, well, if I'm not out there looking for deals, I could spend that time looking for other investors. So really tried to focus and hone in on that. And then again, got just from one of the students in the group, we got invited to another deal. And this one's in Alabama, and it's 176 units. So just working to close that one last quarter of this year. And, hopefully it's going well, but, just like every deal, there's like a couple things that are hicking up this process, but we'll be okay.
Well, I know you've graciously agreed to dive into that one for our Deal Dig segment. So maybe that's a good little segue to start chatting about that. Maybe if you can, let's start off. Just describe the building and the asset itself. Tell us a little bit about the asset itself.
It is a beautiful building. So it's 176 units. It's 22 buildings. So it's a fairly large plot of land. Great occupancy. We're actually buying it out of receivership, which is interesting. The previous owners stopped putting money into the deal, kind of running it on a razor thin budget, and went into receivership. Well, the management company that they were told to use is a management company that we have 2,800 units with. So that was a huge benefit to us because we knew we could trust that management company. We were keeping them on. So you have that existing knowledge of how the property is running, and they can give you honest opinions about it. And so it's a brick construction, garden style, B-class building in an up and coming area of the place where developers are putting in a ton of money, which is awesome. And pitched roofs, it's exactly what we look for. And I'd say it's probably a B minus asset, C plus, B minus.
Cool. Great. And you touched upon this, but let's talk a little bit about sourcing the deal and the acquisition. Obviously, the property management was sort of the in there. Tell
Yeah.
us how that process worked.
The process was a little more difficult than normal. It was on market actually, which was, it was interesting. Like we did have the benefit of having this management company as vouching for us, like, hey, they can actually close. But it was still on market. So it was a competitive deal. And one of the biggest things that we will compete on is terms, not price. So we tell every broker that we talk to, hey, our price is dictated by our investors. Here's the metrics that we require. If it works out, great. If not, no harm, no foul, right? So, but we get super aggressive with our terms. Things like on that deal in Atlanta, we did a 5-day due diligence period. That was extremely quick for what we did. And it wasn't anything we felt super uncomfortable with, but it took away that buffer of raising money, which a lot of investors need, or a lot of sponsors need that buffer. But we got competitive on it because we knew we could raise money quickly. And that was the pain point with the broker or with the seller. They wanted a fast due diligence period and a fast closing. So we took that into heart, and our PSA reflected that. So with this one, it was more that they needed to close by the end of the year. So they needed confidence in that. And they needed confidence that we could take it over, and actually they didn't want to see it go down. So our experience with the property manager played into that. The broker vouched for us, which was huge. So that was how we won. We weren't the highest price for sure.
Interesting. Yeah, that's great. Understanding the seller's pain point and trying to solve for that.
Yeah.
That's great. Okay. And then how did you structure, and I know that this deal is in the works, right? You haven't closed on it yet. Is that correct? Or you have closed and you're just working on executing the business plan?
No, we're closing in about 15 days. So by the time this airs, it'll be, we're not offering any securities here. I'm not soliciting any investments, so it's all good. But it'll close in a couple days, and then it's really about then stabilizing.
So real quick, let's talk about how you structured the deal and financed the deal.
Yeah, so it was it's a 75-25 equity split, 25 to the GP, 75 to the investors, with an 8% preferred return. We like to take care of our investors.
That's great.
And, but the mortgage, we love Fannie Mae loans right now. A lot of people don't like them, but my philosophy is I'd rather hold the property long-term and not flip it to make a quick buck. So our interest rate is low right now. It's like 4.1, I think, is our term sheet, with a year of interest only, 30-year AM. It's a nice loan.
Wow, that's great.
Yeah. So with that comes $5,000 per unit in rehab rolled into the loan, financed with 3% closing costs, I think, fairly certain. So yeah, it's a great loan. The biggest downside, obviously, is you have the prepayment penalty if you decide to sell early.
And how long was that?
It's a 12-year loan, so it's,
okay.
I think it's yield maintenance, and it's got that step down. So I don't know, but like I said, our preference is to hold it. If that changes, we can always put a supplemental loan on top and sort of refinance out the investors. But yeah.
Okay, great. And what was it about this deal that was appealing to you? What was attractive?
The most attractive thing is like when a property goes into receivership, they want to make it look pretty, so that they can sell it off quickly. So they did a lot of work on the exterior, a lot of landscaping, a lot of parking lot work. But the funny thing about them is they don't put money into the interiors. So this is a 1986 product that hasn't been touched since then. A lot of the interiors haven't been touched at all. And so it was kind of a really easy plug and play for us to come in, use our same management company, do the same rehab that we've done, hundreds of times before that. Just put the same appliance package, the same flooring package, the same lighting stuff, and just plug and play. And then there was huge opportunities for, like, they had this massive tennis court, and it was built in the 80s, so tennis was a lot more, but it's a doubles court. And so we're going to pull that out, put in a dog park, put in a community playground, a nice little barbecue center for the residents, because there's a lot of families on there. There's no playground on there on the property. So just really easy cherry picking those low hanging fruit that, we love.
Mm-hmm.
So that's what was so appealing. That, and it was a beautifully maintained building. Like it's awesome. And it's exactly what we're looking for.
That's great. And what was the unit mix on, I know that there's 22 buildings, so it's, spread across. Does it vary, or is it a set unit mix?
It's, I don't think there's any 3 bedrooms at all. So it's all 1 and 2s, which is nice. And it's probably 40% 1 bedrooms and 60, 2 bedrooms.
Okay.
Roughly.
Great. Okay. So, where are things at today on it?
Well, so this is part of the frustration with doing deals, is your timeline doesn't always match up with investor timeline, right? And so trying to raise money during the holidays, which Thanksgiving just passed and we got Christmas coming up, people don't want to part with their money during the holidays. So it's been hard to raise the money. It has nothing to do with the deal. People say, oh, I love it, but I just bought X, or I just, I just bought X. So it's frustrating to deal with that. But at the same time, you have people coming in, a little more savvy investors that say, hey, I need some more depreciation this year. What do you have that's closing this year?
Mm-hmm.
So we're getting a little bit of that, but we have to raise $1 million, in about, like I said, 10 to 15 days. So, we'll do it, but it'll be tough.
Yeah. Yeah. Put a little bit of pressure on you.
That's good though, right?
Yeah. Make things happen.
If that's the only problem we have before closing, we'll consider ourselves lucky. Right?
You'll feel good about that.
Yeah.
And so would you change anything different? I mean, moving forward, let's say you have another deal that shows up near the end of next year. Do you think about things any different moving into a deal like this in the future?
Yeah, I think it all starts with the investor relationship you have. And you have to prime your investors and saying, hey, these deals happen quick, and it could happen, I could be asking you to sign documents Christmas Day, if that's it. Is that something you could do? That way it's in their mind, it's in the back of their head. Like, people think that this will happen when it's convenient to them. And that just doesn't work that way, especially with people that are used to longer or bigger commercial deals, but like office buildings or things that move so much slower than multifamily. Like, we got to close this in 45 days, or, these people aren't necessarily primed for that. So to go back and to have that discussion with our investors, like, hey, this needs to happen quick. When I ask you to wire money, if you're in, go ahead and wire it right away. Don't sign the documents, wait 2 weeks, and then get confused and lose your wiring instructions and all this stuff that you deal with it. But it's frustrating. So going back next year, if there's a deal at the end of the year, I'll still probably do it. I mean, at the end of the day, I'm willing to go through some of that stress if it means closing on a really good deal.
Yeah.
That's the caveat there.
And you're confident that you can bring it home at the end of the day.
Yep, definitely. And if we can't, that's essentially, it's like getting blackballed, right? If you fall through with a deal and the broker finds out, you're done. And so sometimes that involves having an extension. We don't like to use them, but we will if we have to, right? And the sellers understand. The sellers, they're buyers too, so they get it.
Yeah. Well, I'm sure that it'll all work out, and we'll have to have you come back on and give us an update of how it plays out. But I appreciate you being willing to talk about one that has some hiccups, because those are the real deals, right? I mean, right. It's always fun to have someone come on and just talk about all their home runs, but it's also great to hear about the real stories and the real challenges that we face in the business. So,
Absolutely.
well, Lucas, you've been a great guest. I've really enjoyed learning more about your story and how you transitioned into the commercial real estate world, specifically with apartment buildings. I really like how you emphasized how that first individual, Chris, who
Yeah.
helped you break through that mental barrier of age,
Yep.
and really helped you to see that, hey, it has nothing to do with age. It's about taking action and making things happen. And he helped you to realize that could take place for you, and then falling on your face for a year.
Yeah. Yeah.
And then eventually finding a mentor and a group that you really connected with, and then, man, what a track record over the last 12 months. So congratulations. That's
Thank you.
that's a great story. Well, before we go, I've got 3 questions that I want to sort of wind down with. You okay with that?
Absolutely.
Okay. First one, sort of just knee-jerk gut reaction. What's the biggest mistake you've made on your apartment investing journey so far that we could all learn from?
Gosh, I got a lot of mistakes. uh, Biggest mistake is probably not getting started quick enough. It was taking that year off that really, there was a lot of really good deals that were bought in that year. So I took it off and kind of spun my wheels trying to be stubborn and not wanting to pay the money for a mentor. That's probably my biggest mistake in this journey.
Great. Thanks. What's the biggest win you've had on your apartment investing journey so far?
Really just that first closing. It really was, it's starting to put off cash flow now. So my biggest win was just getting one across the table. And you'd be surprised that that first deal is such a relief to everyone. Cause then you can say, oh, I've got this track record. Then you have cash flow coming in and all this stuff that was a big win for me.
Yeah, that's cool. And then last question for you is, what's the best advice you have for someone who's just starting their apartment investing journey?
Don't be afraid to reach out to mentors. Now that being said, that's a huge caveat, right? So there's some people that are terrible at this that are still coaching, but there are people that are genuinely concerned with your success. And so my advice would be to interview a lot. Don't rush into any decisions and just ask for a track record. Like, don't be afraid to say, well, how many deals have you closed? Are there any that aren't going well? You know, and ask the right questions of how are you going to protect your investors, you know, in a downturn, or what are you doing to protect against this and that. And so don't be afraid to take your time interviewing mentors, but at the end of the day, don't pay for a mentor if you're not going to follow through and take action, because nobody is going to guarantee that for you.
Yeah, absolutely. All right. I do have one more question.
All right.
What does the future look like for you? Where are you headed in your mind and your business as it relates to multifamily and real estate in general?
You know, we're, like I said, we're still finding good deals. We're not overpaying for deals, which is awesome. There's a lot of people that are. So I don't see anything changing in the next year. And now we obviously know that something has to change, right? The landscape's not going to look the same forever. So we're going to be flexible. I'm really focused on sticking to growing that investor database, like I was talking about, because when the next opportunity presents itself, I want to be able to pivot with those folks and continue to bring them good deals. So that's my goal.
Love it. Love it.
Cool.
Well, Lucas, you've been a great guest. I appreciate you spending some time with us. Thanks for sharing your story. Thanks for sharing your journey, talking to us about this deal that's a challenge that we've gone into a little bit of detail on, and you're going to work through that. And I'm going to have you back on in the future to tell us how it all came out.
Yeah,
but I appreciate you coming on, and I look forward to connecting with you again soon.
Yeah, I really appreciate the opportunity.
Before we end, where can people get in touch with you to learn a little bit more about your business? I know you mentioned the podcast, Fear Free Passive Investing.
Yep.
And then where else can people get in touch with you?
Yeah. So my website is BANNOCK capital.com. That's Bannock Capital. If people go there, there's a contact me page. They can get in touch with there. My email is just lucas@bannockcapital.com. But if you're a syndicator just starting out and you're having some questions on building that investor database, just shoot me an email. If you're a passive investor, I'd love to have you listen to my podcast. You can find that at fearfreepassive.com. But other than that, I'm easy to find.
Great. Well, everybody reach out to Lucas if you have any questions, if you're interested in passive investing and just interested in learning about multifamily investing in general. Again, Lucas, thanks for coming on, and we'll chat with you again soon.
Thanks so much for the opportunity. I appreciate it.
Talk to you soon. Bye-bye.